Today I'll talk about generally accepted accounting principles. So let us see. Uh, I'll basically talk about essential accounting principles. It is a set of rules, conventions, standards, and procedures for reporting financial information. And these are the various available standards. In United States, there is Financial Accounting Standards Board, which has given US generally accepted accounting principle. Then there is International Accounting Standards Board, which has given international financial reporting standards. And in India, there is Accounting Standards Board, which has given IND AS or Indian Accounting Standards. These accounting standards are applicable for writing of the financial statements, and the three basic financial statements are balance sheet, income statement or profit and loss statements, and cash flow statement. Then now I will cover essential accounting principles as given in various textbooks. So this is a list of accounting principles. I have listed 15 of them, and there may be more. First principle is economic entity principle. It states that business entity is separate and distinct from its owners. Business transactions should be kept separate from those of the owner, partners, and shareholders of the company. Then, monetary unit principle. We should only record transactions that can be presented in terms of monetary unit or in terms of a unit of currency. Then, going concern principle. It is also known as assumption of continuity. Assumption that the business entity will remain in business for the long-term foreseeable future. Then time period principle. The business should report all of its financial results from its activities over a standard time period. And standard time period may be monthly, quarterly, annually. And it is recommended that at least annually we have the financial statements. Then accrual principle. It is based on mercantile basis of accounting. The accrual principle states that transactions should be recorded in the period in which they occur, not in the period in which cash flows. Matching principle. We should report an expense on income statement in the same accounting period in which the revenue is earned so that we can calculate the profit. So profit is equal to revenue minus expense, and both of these should be of the same period. Then revenue recognition principle. It is also known as realization concept. The revenue should only be recorded when it is earned, not when cash is collected. That is when ownership of good is transferred or service is provided to customer, not when the customer pays. The dual aspect concept. It is also known as duality principle. Every business transaction is recorded having a dual aspect. One account is debited, other is credited. Cost principle, also known as historical cost concept. We should record our assets, liabilities, and equity investments at their original purchase cost rather than their current market value. This is debatable principle actually. Objectivity or verifiable concept. Transactions should be recorded in objective manner free from personal bias. They should be supported by verifiable documentary evidence in the form of receipts, etc. Consistency principle. We should maintain the same accounting method across transactions and across period of time. Conservatism principle, also known as prudence convention. Overstatement of liability and understatement of income is the rule in conservatism principle. The revenue and asset should be recognized only when they are sure of being received. The transaction resulting in the lowest amount of net profit should be recognized when given a choice of transactions with equal likely outcomes. Full disclosure principle. We should report all necessary information about our financials to all interested parties. Materiality principle. We can ignore the accounting standards if the net impact of ignoring this standard is so small that it does not mislead anyone regarding the financial information. Reliability principle. Assumption that all financial information presented is the most accurate and relevant information available. Now let us talk about generally accepted accounting principle. As I have told you in my initial slide, it is applicable in the United States, and these are the 10 principles of generally accepted accounting principles. These are very similar to the essential principles as described in this lecture. Then international financial reporting standards. This is the summary of international financial reporting standards. Then there is Indian standard. This can be downloaded from the Ministry of Corporate Affairs, Government of India. This is the website. So this is all for today. Thank you very much.